Hi everybody, Josh Olfert here back with another video, and today we are talking about the best investment you can make right now. It's time to think like an investor. So by far, the number one question I get as an advisor with my clients working day to day is, Josh, what is the best thing I can invest in right now? What is the hottest sector? Is the market gonna go up? Is it gonna go down? Are we gonna see a crash? These are the sorts of predictions that people like me to make on their behalf. Now, what they're really asking is, what prediction or what thing do I know, what secret do I have that will allow them to multiply their wealth exponentially or to get into something that will double overnight? And the reality of the situation is, if I knew that, I would be on a yacht in Monaco. I would not be advising 250 people every day. And this leads me to the greatest fallacy investors encounter as they go through life. And this is the idea that somebody has some ability to predict the future better than they do. And I've been in this for a long time. I've been doing this day in and day out for 5 years, working with hundreds of clients. And what they don't seem to understand is that I can't predict the future any better than them. Even the best investors in the entire world only win 50-60% of the time. They have losing trades just like the rest of us. Now, there are many stories of legendary hedge fund managers. One guy we'll talk about quite a bit, Bill Ackman. He found himself in a position where, due to this pandemic, he made $2.6 billion off of one trade. And the media and all the investing communities rush to praise him for this fantastic trade, when over the past 10 years, he's had an absolute dry spell where almost nothing goes his way. Losing money on bets like Herbalife and all sorts of other big bets like Valiant. So this goes to show that even the greatest investors in the world can't predict the future any better than you or I. This leads me to the worst thing you can do when you begin investing, which is to utilize stock tips or ask somebody for a stock tip. And there's a few reasons for this. The biggest reason is that when you ask for advice, you want to ensure that the person who is advising you has what we call skin in the game. You want to make sure that they either benefit or lose by giving you the recommendation when they turn out to be wrong or right. If the person advising you doesn't actually own shares of the business they want you to invest in, why would you invest in them? If there is no penalty for them giving you the wrong information, what is really motivating them to give you the right recommendation? Another major reason why you don't want to be taking stock tips from other people is one that most people completely overlook. And this is the idea that getting out of an investment is actually significantly harder than getting into one. Now, getting into an investment is pretty easy. You come up with a thesis, you find a company that you think would serve as an attractive investment and can actually grow your money. But when you get to the point where it does, you do buy into that company and it does go up over time, now you're forced with the burden of when to sell. You might be asking yourself, is this gonna keep going up forever? Should I get out now? Or on the reverse side, you might think, well, should I get out now before this tanks? The big burden in investing isn't getting in, it's getting out. And if someone gives you a huge stock tip to get in, and you don't have that same person helping you get out, you effectively eliminated all of the benefit of that advice. Because at the end of the day, you only make money when you sell. Would I recommend something individual, an individual business, an individual investment? What is the best investment you can make right now? Well, it really depends what you're after. If you want to multiply your money fast, there are ways to do that. There are ways to create wealth that are relatively quicker than the common traditional ways of investing. But if you're someone who feels more methodical, you want to have a little bit less time commitment, you want to put yourself in a position where you can create a compounding interest machine that can grow wealth over time, that allows you to do the things you want in life, investing in the traditional ways are perfect for that. If you would like to have that incremental 7 to 8 to 9% rate of return over the course of your life, I recommend something pretty simple. It's something in the industry we call core and satellite. Now, your core portfolio is your methodical, your systemized, your managed product. And what I mean by that is it is professionally managed. Now, when I say this, what I'm really referring to is building a diversified, low-cost portfolio of index funds. And if you guys stick around, we're gonna talk all about what index funds are and how those work. Now, that's 80% of the money. With 80% of the money you have to invest, you want it in some sort of system. Now, with the other 20%, this is where you can have your fun. This is where you can go out into the market and look for different companies that you find fascinating and find interesting, and take that 20% and place educated bets on businesses that you believe will do better over time. If you would like this part of your portfolio to be more speculative, less methodical, more a bit of a gamble, this is a great way to identify as an investor. See, if you always have your investments managed by someone else, you'll find yourself in a position where you're too disconnected from the investments to feel like you're an investor. And in order to think like an investor and become an investor, you have to identify as being one. So what we effectively have here is what we call a barbell strategy. A barbell strategy is, instead of just taking the medium road, we take two extremes. We have an extreme at one end, which is our conservative, systemized, diversified portfolio of index funds that are guaranteed to get us a pretty great rate of return over the course of our life. That is the low risk, guaranteed way to do reasonably well. Now, on the other end of the barbell, we have the exciting side. The side where we get to take a bit of a gamble and test our thesis, test our philosophy in the market, and see if we can pick a company that might do better than others. Now let's talk about the exciting one. If that conservative strategy doesn't seem fast-paced enough for you, there's also another method. It's what we referenced before about doubling your money, or being in a position where you can create real wealth faster than you could otherwise. And if you are willing to put in the effort, if you're willing to put in the time, if you're willing to invest your energy and your money, really the greatest way to grow wealth quickly is to invest in yourself. As a younger person, or as a person of any age, if you can learn skills that make you more economically valuable to the marketplace, you can exponentially increase your wealth in a different way than investing. Now, one way I might recommend you do that is learn how to build. Learn how to become a producer in the economy rather than just a consumer. Businesses have this wonderful benefit of being able to earn money without people having to be there. You can employ staff. You can create machinery that produces for you while you sleep. If you own real estate, you can rent that out and make money without physically having to be present. Now, it is this ability, this asymmetry, where we are putting in some amount and we are getting out more than we're putting in. This is the leverage that business allows us. So what I really want people to know is that you cannot build wealth by renting out your time. And what I mean by that is you cannot be in a position where you are trading your time away for a set amount of money. When most of us go to an employer and become employed, we earn an hourly wage. And that basically means we are trading away our time. We are giving our 40 hours a week, and we are receiving a certain amount of money in proportion to the hours that we worked. Wealth generation is about removing the link between those two things. We need to find income sources where the income we earn is not proportionate to the amount of time we put in. Great examples of this would be real estate. If you can own a piece of property where people live in and they pay you rent, you don't necessarily have to be there trading your time all day for that property to run, and you still receive the income. That is what I mean by not having your income proportional to the time you put in. Another fantastic example that we all know about would be software. Now, we know Bill Gates is one of the wealthiest people in the world. What he did is he created a software one time. He created Windows, and it allowed him to sell that same thing over and over and over. He removed the link between the amount of income he was earning and the time that he had to put in on a consistent basis to earn it. In order to generate wealth, you need to find a way to have an income stream that is not related to the amount of hours you're putting in. So to invest in yourself means to learn ways, learn skills, learn how to sell, learn how to go out into the world and have a product that you can market and sell. Learn to sell something where your income is disproportionate to the time you put in. Real estate, for example. Realtors, if they sell a $200,000 house or a $2 million house, do a very similar amount of work. But the one who sells the $2 million house makes 10 times more money. because the income is disproportionate to the time put in. Learn how to build, learn how to sell, learn how to build software. We all understand that the future is going to entail more automation, more software. Put yourself into a position and invest your money in a place where you can learn these skills and learn a way to sell them. So if you're finding yourself in this position where you have $3,000, $5,000, $10,000 to invest, and the traditional investment markets just aren't cutting it for your expectations, it is more than reasonable for you to take that money and invest it into yourself. Invest it into courses, into skills, into books, into places where you can multiply your value. So if you have $3,000, $5,000, $10,000 and you're relatively young and feel like you have the energy and the ambition to start a business of your own, or to pour your effort and your heart into a business or a skill that could pay off in spades, that is a totally reasonable way to invest. You can invest in yourself. Trying to pick the perfect stock is never going to pay off long term, but laying the foundations of proper habits for investing and financial success over the course of your life will pay off forever. So instead of only trying to pick the best investment right now, we can work towards picking the best strategy for our entire future. Thank you so much for watching this video, and if you enjoyed it, please comment below and tell me what investment you would make in yourself. And make sure to hit that subscribe button. I'll be back soon. Until next time.